FY25 earnings conference call of Beta Trucks Limited, hosted by Phillip Capital PCG Desk. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Renuka from Phillip Capital India Private Limited. Thank you, and over to you, ma'am.
Thank you, Michelle. Good afternoon, everyone. On behalf of Phillip Capital Private Client Group, I welcome all of you to the H1 FY25 earnings conference call for Beta Drugs Limited. Today, from the management, we have Mr. Rahul Batra, Chairman and Managing Director, Mr. Nipun Arora, CFO, and Mr. Ashutosh Shukla, Director of Sales and Marketing. I now hand over the conference to Mr. Rahul Batra for his opening remarks, and then we will open the floor for Q&A. Over to you, sir.
Thank you, Renuka. A very warm good afternoon to everyone. On behalf of Beta Edley family, I wish you all a very happy Diwali and a prosperous New Year. To start with, I will take you the highlights of the numbers of this half year ending September 24. Beta's consolidated revenues from operation for the first 6 months of FY25 grew up by 28% to 180.3 crores from 141.27 crores compared with the same period ago. Strong top-line growth was aided primarily by 141% increase in exports, while our own brand sales jumped close to 30%. Gross margin rose to 42.35% from 40.44% compared to the same period last year. This was primarily due to the rigorous efforts to control the raw material costs, which we discussed in the last call. Our consolidated EBITDA grew to rupees 40.31 crore from 33.39 crores compared with this year ago period. The EBITDA margin grew sequentially to 22.36% from the last year's EBITDA margin of 20.75%. Net profit too increased by 23% to rupees 24.44 crores from 19.87 crores compared with the same period ago. Our net profit margin stood at 13.55%. At Beta, we continue to focus on increasing productivity and gaining efficiencies across the value chain. Now I'll take you to the key highlights for September 24. There have been healthy growth across verticals. Our own brand increased close to around 30%. International business have contributed to 141% growth, with lots of registrations have come in place. There have been 20% growth in the API business, and our CDMO business has shown average growth of 2 to 5%. We have successfully completed and got the certificate of Zazibona, which will help company to further penetrate deep into the West African countries, including South Africa. This half yearly, we have successfully launched 3 new molecules in formulations and parallelly developed APIs in the backwardly integration. Company has finally filed an application for audits of EU GMP and Mexico, that is COFEPRIS. The COFEPRIS audit is expected by Jan, and EU GMP audit is expected before March 25. Now, I'll take you to each vertical individually. Our first vertical is our own brands. As on today, we have total of 1,500 plus prescribers from our range of products. We have achieved a small milestone of making 10 brands in top 5 selling brands in the cytotoxic segment in India. We have added more than 200 plus prescribers in our H125. We have further penetrated deeply into the private, corporate, and government hospitals by increasing our strength. Going ahead, we are on the verge to launch 5 new molecules and NDDS by next year. Those molecules have been identified, looking onto the potential on a particular segment and to reduce the toxicity for the patients. Those will be one of the first time in launch in India for the next 5 years. We are also trying to tie up on exclusivity basis to launch biosimilars in Indian market. Coming on to the export side, we have recently received new registrations from many countries, mainly from Latin and Asian market. Company has recently received Zazivona approval, where we have started filing doses in all the 4 countries which are covered under Zazivona. Company has done all the major compliance before EU GMP audit. Company has also filed close to 100 new dossiers for which registrations are yet to come. Going ahead, there is a huge opportunity available for us in the export market. We have planned to get maximum approvals along with the maximum dossier submissions. The number of the people in regulatory side has been increased from 6 to 10 to enable easy and faster filing of the dossiers. We have a complete plan to penetrate Asia, Latin, CIS and African market. Coming on to the CDMO. Although the growth of CDMO is less this half of the year, but going forward, the numbers will increase and it will reflect in terms of the sales figure. To give you a brief about CDMO, we have not lost even a single CDMO partner. We will have a steady and better sales number in the next half of the year. Coming on to the API. The API business is one of our key focus area as there are not so many players in the market. We have done enough capex to upgrade the facility. The focus of this capex is to facilitate the audits for beta registrations in the regulated countries. We have also developed 3 new molecules which will be filed for approval and expected to get an approval by next financial year. There have been addition in R&D team, QC team, QA team and regulatory persons to enable the audits and filings on time. Recently, company has also received 6 COPPs for which the opportunity for direct export is open in many countries. Now coming on to our cosmetics and the derma market. We have made our presence in the pan-India market. We have reached out to around 6,000 customers. The sales from April onwards have touched around 1 crore per month. The prescribers, which were 700, has been increased up to 1,100. We have expanded our portfolio and most importantly, we have tied up with a European company that's basically from Italy to launch first product to launch some unique products in the Indian market. The product has already put into the registrations and the registrations are expected to be out by December end. Lastly, I just want to take you towards the fundraise. As you all are aware that company has recently gone into the fundraise. The idea of selecting these partners was very substantial. The fundraise is primarily for our future growth. As we have updated earlier, that we don't need any funds till 450-500 crores of turnover. Since we are about to reach this milestone, probably by next year, we had to think a way forward for next 5 to 7 years. The funds which we are raising will be primarily used for the following purposes. Number 1, we are creating a state-of-the-art R&D facility both in formulation and API. This will give us an edge in the cytotoxic market as there are large number of molecules becoming off patent in next 4 to 5 years. This will enable us to file the dossiers in future in the regulated markets. R&D has a key role in filing a dossier where you can have a proper DMF and dossiers. We have to do a lot of product development both on the API and the finished formulation side. The second main investment will go towards our KSM plants. We are going furtherly backwardly integrated, where we have planned to come up with our own production for intermediates to support API and prepare the best DMS for filing dossiers and direct export to regulated countries. This will further help to increase our margins and bottom line. Lastly, we are also planning to foray into the recombinant proteins. As we all are aware, that Beta has put a substantial mark in the oncology cytotoxic market. Now, getting into the biosimilar line is a future. So to start with biosimilar, we have planned to get into the recombinant protein side. As we have established ourselves well, we have to foray into some new novel technologies and new products for our future growth. To give you a brief about our potential investors or partners, this fundraise is a total preferential issue of 117 crore from our marquee investors like HealthQuad, which is India's best healthcare transformation fund backing innovative models to radically improve healthcare access, affordability, and quality of care. This fund is backed by experienced GPs such as Quadria Capital and LPs such as US pharma giants Merck and J&J, Johnson & Johnson. The second partner is Tanas Capital, is an Asia-based private investment firm with an aim to participate in the growth of emerging corporates. The third partner is a generational capital fund. Here I close my remarks. Now we welcome all the questions from the participants.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gautam Rajesh from Leo Capital. Please go ahead.
Hi, good evening, sir. So I had two questions. My first question was, who do you compete with in the CMO for oncology in India? Which are the companies doing CMO for the Indian market for sure?
Okay. So CMO in India, there are 2 or 3 large players. First is us, second is BDR, and third it is equally divided among 2-3 companies. One is Hetero Healthcare, one is SP Cura, and there is 2 more. So we are competing against each other, but there are no like one good player who is available for CDMO market. And the second question you have asked about who are our CDMO clients. So we have all the Indian MNCs on our platform. It starts right from Glenmark, MSN, Intas, Cadila Healthcare, RPG, Hetero, then Alchem, then Eris Life Sciences. All these players are associated with us.
Okay, sir. And my next question is, what sort of scale can you expect from the export business, let's say, for the next 2 to 3 years?
See, since you have seen the performance as compared to last year, we look forward. We are looking as a great opportunity in exports, and our sales revenue will be on a very high side as we talk about the export sales.
Sir, any kind of like number or rough figure you can give? Or like
we tend to grow at a pace of 25 to 30% for next many years to come.
25 to 30% for the next 3 years?
I'm talking about the total growth of the company. We tend to grow at 25 to 30%.
And would export be more in that?
Export will be much higher in that percentage.
Oh, okay, sir.
Sir, do you have any other questions, Mr. Gautam Rajesh?
No, ma'am. Thank you.
Thank you. We'll take the next question from the line of Yash from Stallion Asset. Please go ahead.
Hi, thank you for the opportunity. So I think last time what had happened was that because of the raw material prices, I think your EBITDA margin went down to 18%, right? And I wanted to understand, like, what has happened, how you're able to control your cost so that, margin is again back to your guidance of 22% and above.
So last year, as we discussed, we told you that the major sales were for the platinum side, and the raw material prices of the platinum have gone up high. So this year, the platinum prices have gone down, and also we have restricted our growth towards the more profitable products, rather concentrating ourselves on the platinum side.
Okay, got it. And so, in your international business, obviously 140% growth is coming from a smaller base. So, what are the new sort of products and what are the new countries that you're targeting? Are you targeting to go and expand in US as well this year? Next year when you get approvals?
Yes. So first, there are two types of strategies which we have. First is the EU. So after the EU, we'll start filing the doses for EU market, Europe markets, and that gradually will, by the development and the upcoming facility in R&D, will start the product development and the DMF for the US market as well. Once we are done, in next 2.5 years, 3 years, not even 3 years, 2.5 years, we do have a plan to get into the US market.
Okay. And last question, what would be your capex for this year in FY26?
FY26, if we leave the new things which we have planned, the total capex will be from the internal accruals, and that we are doing consistently and continuously. So that will not be more than 10 to 12 crores.
Okay. And this is including the fundraise that you've just announced.
No. The fundraise idea, I've given you a complete picture where the fundraise is going to be utilized. So the first fundraise is going to be utilized in R&D. The second part of it is going to be utilized in the establishment of a intermediate plant, and the third will keep the funds, and we are planning to venture into recombinant proteins.
Okay, got it. Thank you. All the best.
Thank you.
Thank you. We'll take the next question from the line of Manoj Jetwa from KSA Shares and Securities Private Limited. Please go ahead.
Good afternoon, and thank you for the good set of numbers which Better Drugs and team have posted. So my first question is relating to the API business of the Better Drugs. So globally, the API business is almost around $48 billion right now in the oncological segment. So what is the opportunity it throws for the Better Drugs as a company? Appreciate you share some color on it, sir.
So API business has a lot of opportunity. Till date, our export business is almost negligible in terms of API is concerned. It is not even 1% of the total revenue what we are putting right now. So the idea about the plan and the strategy behind API business is first to make the facility state of the art, which we are continuously doing. Second is to prepare a strong DMFs, which we can give to our partners or to the suppliers who can file the doses along with it. So this strategy is working very effectively, as we have started preparing those DMFs which we can file in the regulated markets. So the idea is to start with beta, so that the beta can file the dossiers based on the DMFs made by Adlai Lab. And the second strategy is to hire a person where we are in continuous searching out for a person who can handle the API international business, where we have the best DMFs and give it to and start exporting it to the international market.
So my second question in the oncology side only, and that is pertaining to the the hormonal treatments. So what is the market size? What is the addressable market size, and how much we can tap it in that, apart from the focus area of cystotoxic histotoxic, which is almost around 70% market coverage, Better Drugs is having it?
Sorry, I didn't get your question.
Hello. So on the oncological side, we are focusing more on the cystotoxic, right?
Cytotoxic, yes.
The second focus area of our in the oncological side is of the hormonal imbalances which happens in female patients and all that. So the treatment of cancer treatments which happens in the females due to the hormonal imbalances. So how big is the market size for that, sir?
See, we are not concentrating on the hormonal side. We are only concentrating on the cytotoxics and the hematology side. So our product range and our product different identification is totally different. What basically the question is coming from your side.
Sir, can I address this question?
Yes, Ashutosh ji, please.
Yeah, I believe sir is asking about the hormonal therapy in cancer treatment. So as of now, we do have hormonal therapy, which the covered market is somewhere close to around 55%. The remaining hormonal therapy like apalutamide, gosling depot, dagarelix, darolutamide, exemestane, all these products we don't have, which has a good market scope, and we will be launching these products in next 2 years' time. So we have shortlisted a few of the hormonal drugs, and not only the hormonal drugs, but for us, the next other growth driver will be supportive care products, wherein as of now our presence is very less. And the third growth driver for us is biologics. So we are trying to tie up with a couple of companies for the biologics. So it's not only the hormonal, but supportive as well as the monoclonal antibodies we are targeting for our future growth.
So my third question is pertaining to bookkeeping question. So there is a significant increase in the trade receivables. So could you please add me some colors on that for the trade receivables side?
Yeah. Nipun, can you please answer this?
Sir, the trade receivable side is okay. If you see September 23, it was 100 days. In March 2024, it was 98 days. Now it is 101 days. So it is going between 98 to 101, 102 days. So it is all similar. Working capital days, if you see, working capital days has been consistent with 86 days only. Not even 87, not even 85.
Okay. Thank you very much, and all the best.
Yeah.
Thank you.
Thank you.
Thank you, sir. We'll take the next question from the line of Ranveer Singh from Nuvama. Please go ahead.
Yeah, thank you for taking my question, and congratulations to the team for giving consistent good performance. Few questions from my side. One is related to that other expenses we see in this half year that this has elevated. So is there any one-off kind of expenses here related to overhead or something in this period?
Nipun, can you?
Ranveer, the other expenses include selling expenses also. So major would be if the increase, this increase is proportional to the sales. It is in the line with the previous years only. So this year we did the CPHI in Milan. This year we did the CPHI in Dubai also. So maybe because of that the expenses have gone upwards. But if you see the percentage, it is not increased.
Okay, so this kind of run rate is likely to continue in terms of percentage of sale.
Yes, sir, it will continue.
Okay. And secondly, in R&D side, I think we in FY25, you said 3 NDDS we have already launched, or that chart shows that 3 has been launched. So right now in the market, how much NDDS we have?
So we have total of 1 NDDS which we launched in the month of February, and 1 NDDS is already in pipeline which will be launched in the month of June next year. And there is 1 more NDDS which will be launched in the month of either January or February, depending on the approval.
Okay. So I think major portion of NDDS is yet to come in our.
Yes.
Arsenal.
Apart from this, we have also filed 3 more NDDS. We are filing 3 more NDDS in the DCGI, which will take approximately 12 to 15 months for an approval. The product development and everything is already done.
Okay. So next year, in total, in FY25, how many entities will be there in the market?
Sir, your voice is breaking. Mrs. Singh, your voice is breaking. Can you repeat your question, please?
So how many NDDs in FY25 you would be launched in this year?
So
Total?
next year total will be 2 NDDs and 3 new molecules, which will be launched in next financial year.
Okay. So of that 8 new NDDS molecule which we have mentioned to be launched in 2 years, none of it is launched. So this is completely a pipeline right now, right?
No, one we have launched right now in the month of January. Second will be launched in the month of January, February next year in 2025. And the third will be launched by July 2025. And there are 3 which we are filing now that will be launched in the financial year 26-27.
Understood. So of all these NDDs, what would be the potential revenue of the representative market size, if you could give that will give some idea.
See, I'll just give you one small example. We just launched one product that is Magistrol acetate suspension. The total market size was less. But when we launched this NDDS, the market size has been increased. And apart from what the tablet which was selling in the market, we have created the parallel market size with this NDDS. So the market size are there, and everyone is looking for an opportunity to have something new in the market. There are patients who cannot swallow tablets because most of the oncology tablets, they are big in size. So to reduce the burden of taking a tablet, we are converting into suspensions, and we are coming up with these NDDs.
Understood. So the total market size would be any guess here or anything if you could have?
Actually based on the molecule to molecule wise, and the 2 molecules which we are launching by next year, the market size will be close to around 70 crores, and we tend to increase the market size by introducing these NDDs, as we have illustrated this by launching our first NDDs in the month of January this year.
Okay, fine. So total 23 products I see is in pipeline, including 8 NDDs. So just wondering how much R&D we are currently spending. So what was the R&D expense in first half?
Yes, Nipun, R&D, please.
Normally our R&D expenses are generally to the tune of 2%, 3%. But this year, as Rahulji has already told us, that one of the purpose of fundraise was R&D also. So that is something which is to be done. So you can explain it further, Rahulji.
So basically, why we are coming up with a separate R&D facility is that tomorrow we have a plans to go to the all regulated markets. Till now, the products what we are producing and that requires all the product development for the regulated markets. So this R&D will facilitate, number one, will facilitate the quality of the product to be launched in that market, the specification to be meet out to launch in those regulated markets. Third, there are a lot of products which are becoming off patent. So we are trying to develop all these molecules and give it and do even CDMO for some international players. What we are anticipating that when we are working out on these molecules, so we might get some CDMO for this also. So the R&D expense right now may be around 2 to 3%, but it will eventually go up to 4 to 5% after coming up with this facility.
No, so there would be 2 elements of it. One is one-time cost. You have to set up a R&D center facility. Another is a recurring one. So just wondering that 2 elements, if you could give some idea that how much would be spending there on R&D setup plus. So
the one-time cost will cost us. Right now we do have R&Ds. API has an R&D in its own plant. Formulation has an R&D its own plant. So we are combining this R&D and we are making one R&D center where we are doing a capex of close to 10 to 15 crores. Number one. Second is about the recurring expenditure. So the whole teams will be transferred to one center, and then we will be hiring some more personnel into that. So the R&D expense which is right now 2 to 3%, might go up to 3 to 5%.
Okay, so this may be in the range of 15 to 20 crore roughly.
Yes, yes.
Okay, fine. I think this is indeed a good step, and going forward, let's see. And you already mentioned that about European GMP approval. So any progress there? When we can expect this to come up?
We have done a lot of compliance as our consultant has advised. Our compliance is almost like 80-90% of the compliance is already done, and we have already filed an application for EU inspection. We have filed an application in 3 countries where we have got from one country we have got the invitation that they can come before March. So any between next 4 months we might have an EU audit at our beta facility.
Okay. Thank you and all the best. Thanks.
Thank you.
Thank you. We'll take the next question from the line of Bhagwan Chaudhary from Shubh Capital. Please go ahead.
Yeah, hi, thanks and congratulations all for great set of numbers.
Thank you.
I had just 2 questions. One is regarding your intermediate plan. So you are expanding for the intermediate. So the question is how much you are going to invest into that first. Secondly, what are your plans? This will be for the existing APIs or the new intermediates?
Okay. So the total investment we are planning to have an intermediate facility will be close to 15 to 20 odd crores initially. The idea of getting into the intermediate facility was right now our total procurement of intermediates, like 60-70% of the intermediate is procured from China. Where, as you know, government of India is pushing a lot towards Make in India right now. So we have today, as per the today's scenario, we have got a good manpower in R&D side where we can develop the products right from initial steps. So intermediate facility will give us a boost to support our API plant, which will further go for the EU regulations. Tomorrow we have to file our doses in the regulated markets. So this intermediate facility will also come in the scope of EU GMP approval. Plus our API plant will be boosted by the intermediates which will be sourced from this intermediate facility. So not only this, when we are producing intermediates which are being sourced from China, which will be done in-house, this will add on another 10 to 15% margin in our total revenues.
So this all will be for our internal API products, whatever we are making.
Initially, it is for...
We would be selling outside as well.
No, initially it will be for our internal only. But yes, we have spoken to a couple of companies in India who are already producing API in cytotoxic API. They have also shown a keen interest in buying those intermediates from us.
So any idea how many products we are targeting, or if you can enlighten us?
We are planning to have close to around 20 to 25 reactors, where our target products will be around, initially it will be around 18, and gradually it will be increased up to 25 to 30 products.
Okay, great. Secondly, just if you can share about the derma segment and its outlook, what it is doing now in terms of the revenue and profitability, and how we can see 2-3 years down the line of the segment.
Sure. Nipun, can you speak on the numbers for derma, and Ashutosh, can you take about the further outlook for derma?
The sales number for Derma for the first half was 6.4 crores, 6.4 crores, and the EBITDA was a negative of 1.3 crores. So that means that EBITDA number which you are seeing right now, that is 22.36%, that comes to 24% if I exclude Derma thing. So these are the numbers.
And any future outlook, how we should see it 2 years down the line?
So we have gained momentum since last 6 months. So from April onwards, we have started touching the business of 1 CR plus. And as of now, our major objective is to have more number of prescribers, to which we are working. And from 700 to now, we have around 1100 prescribers. This is one strategy, and by the end of this year, we want to make it at least 1300 to 1400. And in next financial year, we want to make it at least more than 2200 prescribers who will be supporting to us. So 2200 means almost more than 30% of the coverage which we have. Those doctors will be the supporter of beta drugs. That is point number 1. Point number 2, we will be launching at least 5 more drugs in cosmetology. Not only that, as Mr. Rahul has said, that we'll be getting into cosmetology market, premium cosmetology market, by importing drugs from Italy. So we have already tied up with Italian company, and the registration is under process, and we are expecting registration in another couple of months. So once those products are out in the market, that will also give us the additional revenue. So in terms of numbers, probably this year we will land somewhere close to around 13 CR, which will be double in next financial year. So next financial year, we are expecting around close to 26 to 30 CR with launch of new molecules.
Okay, great. Thank you so much, and all the best.
Thank you.
Thank you.
We'll take the next question from the line of Chirag Fialoke from Ratnatraya Capital. Please go ahead.
Hi, am I audible?
Yes, Chirag, please proceed.
Hi, good afternoon, team. Congratulations on a good set of numbers. Just one bookkeeping question. The CDMO business, that means this first half did around 73 crores of sales? 73 crores of sales?
Chirag, your voice is not audible. You are asking about CDMO business. How much it has done? You are asking this?
Yes, first half, yes.
The first half it has done 72.7 crores.
Perfect. Understood. So, and here the outlook for the second half is that obviously the first half has been flat, but the overall year we feel that there still will be growth.
Yeah. On overall basis, we expect a growth of 7 to 10% here.
Understood. Got it. So, and just one more bookkeeping question on the convertibles, the compulsory convertibles debentures that we have raised. There is a small coupon on that. When does this start becoming payable, and what is the cash flow there? As in, when will you get the cash, and how will the coupon be paid?
So basically the coupon is 0.65% monthly. So this is convertible in 18 months.
And at the choice of the investor. So whenever till the time that they convert, they get this coupon.
Yeah. After they can do so at any point of time after, I think, 4 or 5 months.
So this interest will be incremental and will be coming in from, say, the second half.
Yeah, it will be coming from second half.
Understood. And the quantum of that will be around 9 odd crores a year. Is that broadly right? That's my math.
Yeah.
Perfect. Thank you so much. Thank you for the time.
Thank you. The next question is from the line of Varun Gupta, an individual investor. Please go ahead.
Thanks for the opportunity. Can you talk about the growth of the international business? What sort of growth do you expect there over the next few years, and what is the margin profile in that business for us?
So export business, we expect the growth another like around 50% for next few years down the line. As I said in my opening remarks, that we have put a lot of registrations, a lot of dossiers, and we are yet to receive those registrations. Just now you have seen in our numbers, we got some registrations and our sales have gone up high. So we are expecting more registrations to come in next couple of years. The numbers will be again, we expect 50% for 50 around 50% growth on the export business for coming 3 to 4 years down the line.
Got it. And what is the margin profile of this business, sir?
So the EBITDA margin will be in the range of 23 to 26%.
Got it. And in the CDMO business, where we are doing manufacturing largely for other companies for their domestic revenue, is that correct, or are we manufacturing for them for international markets also?
So we are only doing for domestic. There is only one company we are doing for international, that is Kaplan Point.
Got it. And how much market share would we have in domestic manufacturing for oncology drugs?
Market share will be actually there are no exact numbers in the market since it is not covered by any good agency. So we don't get a clarity on oncology. This is a problem with every super specialty division. You don't get any clarity on the numbers. But yes, we do have a substantial market share, and but this market is increasing at a CAGR of 15 to 20% every year.
And what would be your rough sense of the market size for domestic CDMO, and who would be our key competitors in this space?
See, I cannot give you the rough estimate of the CDMO share, but I can give you the estimate of what is the size of a cytotoxic market. The cytotoxic market in India is close to around 3,000 crores for our product of range. Plus, there are a lot of products which are becoming off patent. This market will eventually grow to 4,000-5,000 by 2000, maybe 28 and 2030.
Understand. And so this would be 5,000 crores at end customer sale value. So at manufacturer value, this would be closer to 1,500 odd crores?
No, it will be close to 1,500, 1,800 odd crores. 1,500 odd.
35-36%.
Yes.
35-36% of the overall market will be the market size.
Yes.
Got it. Thank you so much, sir.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you so much. It was pleasure to have you all on the con call today. At Beta Drugs, we always believe in giving the quality drugs. Since we are producing a cytotoxic drugs and we care for the patients, we always aim to give a quality product. We as a backwardly integrated company has a lot of strengths, and there are a lot of opportunities still to explore in the market. Thank you so much, and see you all again at the end of the year. Thank you.
Thank you, members of the management. On behalf of Phillip Capital India Private Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.